Good morning, it's Rob Murphy here, head of the financials team at Edison. It gives me great pleasure to be speaking today with Gianluca Garbi, who is CEO of Banca Sistema. And I'm just going to ask Gianluca a few questions about the bank. So first of all, can you briefly explain Banca Sistema's three main businesses and their balance sheet weighting?
First of all, good morning to you as well and to all the people that will look at this video. I'm, as mentioned, I'm the CEO of Banca Sistema, as well as the relative majority shareholder that together with the two Italian banking foundation. Banca Sistema is an Italian independent specialty finance company that has started back in 2011. The three main activity are the following: the factoring, the CQ, and the gold and jewel-backed loans. The factoring represent the main activity of the bank, and when we talk about factoring, we talk about a specific type of factoring, which are trade receivable for companies that are supplier to the Italian public administration, which include the local entities, central government, as well as tax receivable. And 70% of the factoring is non-recourse. The total in terms of asset related to factoring represents 60% of our balance sheet. The second product is the CQ, which is the salary and pension back loan that represent 35% of the total customer loans. The CQ stay in Italian for cessione del quinto because these are individual personal loan where the employer is obliged to pay the loan at every month in deduction to the payment of the salary or in deduction of payment of the loan. The third business is what I mentioned, is the gold and jewelry backed loan that represent a niche market. Today is only 5% of the total customer loan, following the acquisition of a Banca Intesa business, but we do expect that this business will grow much more thanks in particular to this acquisition. The collateral to this product is for 80% is represented by gold, and only 5% of this loan are repaid through the auction of the asset. Otherwise, 95% of individuals directly redeem the loan, returning the money and taking back their asset that was used as a collateral.
Maybe going into a bit more detail, could you describe the contribution of those businesses in terms of the total income and their margins, and what expected return on equity you expect from those businesses?
When we look at the first half of 2020, we can split as following. 80% of the total income is represented by factoring, and the factoring that with public administration has a gross income margin of 5%, with a return on equity of the division of the factoring above 20%. The salary and pension back loan represent 19% of the total income, again for the first half of 2020, with the gross income margin between 2.5% and 3%, depending whether we work on the indirect CQ, where we buy portfolio, or direct, where we directly lend money to individual. And the return on average equity of this product is today 10%, because majority of our assets are indirect, Going forward, this will grow because more and more we will lend money directly in this product. The gold and jewelry-backed loans has a small contribution today because the acquisition of Banca Intesa business just happened on the third quarter. But the gross income margin in this business is 15%. On the liability side, we are, on the other hand, well balanced between wholesale and retail funding, with an average cost of funding below 1%.
And coming to the main factoring business, why don't Italian public administration shorten their payment times to suppliers?
Well, as probably everybody are aware, Italy is the second worst payer, just before Greece. The reasons are not necessarily related to liquidity, but is more connected to the process and internal bureaucracy of the public administration. It's fair to say that in the last year, the delay has been reduced, in particular on the healthcare segment, thanks to some one-off injection of liquidity that has been allowed by the European Union. But since then, the situation has remained stable, so the delay are pretty much the same. There are incentives for public administration to pay as fast as they can, because when they pay with delay, they have to pay the late payment interest that are set up and established by the European directive, which are 8% above the ECB rate. So today are at 8%. The reason why they're not paying, as I mentioned, is not a question of liquidity, but is only a question of bureaucracy. In terms of our experience in collecting the late payment interest, for all the cases where we claim those late payment interest through an injunction to pay decree, we have received 80% of these 8%, simply because we had preferred to settle rather than wait. Otherwise, we will have collect 100% of this amount. Great,
thank you. And we've talked about the attractive returns then in your various businesses. What are the risks associated with them?
When you look at our balance sheet, our experience, it is clear that we have a very low risk exposure, as most of our assets are versus the public administration. On the factoring is almost all related to public administration, but also on the CQ, because is 85% is versus employee of the public administration or retired individual. There's only 15% that is not public administration, but in any case, there is an insurance that covers against the risk of death, or in case the individual lose his job. The other business that is the gold and jewelry back, as mentioned, the collateral is gold, so the risk is even lower. Consider that we have a loan to value that is in the area of 50%. So the product is in general, all the product that we are involved are a very low risk product. The question could be why other people would not do the same, and I think that there are two answers. First of all, which are related to some barrier of entry to the factoring product. First of all, in order to be profitable, you need to have a large economy of scale. So any newcomer, there's been some attempt in the past by initiative led by private equity or hedge fund, didn't succeed because they were not able to reach the level of client that allow to cover the fixed cost. So this is a first, I would say, message connected to it. The second one is also connected to the fact that when you stay with the one factoring company, it's not so easy to walk away and go elsewhere unless the economic value is so important that it's worth to take the risk to move from one factoring company to the other. Last but not least, talking about risk, even during the last 10 months, during this COVID-19 situation, our numbers have proved to be very resilient, both in terms of P&L, but also in terms of turnover that we were able to generate in all the business that we are involved.
And also, I guess, on the position of risk as well, could you talk about your regulatory capital position and also related to the returns you're making, what your dividend policy is?
The capital requirement that we have is 7.75% in terms of the core tier 1. And if we look at, again, the data on the first half of 2020, our level, including the acquisition of Banca Intesa business, is at 11.7%. So we are on a very safe zone in terms of core tier 1 capital. In terms of dividend, we don't have a set policy. What we can say is that we have always paid 25% of the net profit. And the first year that we haven't paid that is this year, but not because of our unwillingness to pay, but because, as you know, the European Central Bank, as well as the local central bank, have strongly recommended not to pay, to postpone the payment of the dividend. So for Banca Sistema, what we have done, we set aside this dividend as due to shareholder, and we have postponed the payment when the regulator will allow the banks to make the payment. So in theory, we could expect next year to have double payment of dividend if the regulator will release their ban to the European Bank to pay dividend.
That's very clear, and we all look forward to COVID declining and you being able to pay dividends again. So with that, I'd like to thank Gianluca and wish everyone a good day. Thank you.
Thank you.